Hey there, traders. This is Sam with your E-mini futures market recap for Monday, October 21, 2024. Time is currently 8:35 a.m. Eastern. We've got levels of potential support and resistance identified in the SPY on this chart. These will be used to help inform trades in the E-mini futures today, following a set of rules. Check out the description below to learn more. In the overnight session, price has dripped down a little. They found a bottom a little above the zone down here shown by the two levels and dashed lines, and they're currently trying to climb back up again. They could go higher, but they could pull back some more too. To me, today seems like it could be a toss-up. They're just in the middle of an area, and while the big picture is still bullish, they might lose some of that bullish conviction soon. Don't really see anything conclusive at this point, but we will find out probably sooner than later. Whatever happens, we will come back to this chart after the closing bell to discuss any trades that happened in the E-minis. Any trades entered in the E-minis based on these levels in the SPY will be dissected. We're going to either make money and learn something, or if we give money back to the market, which is the 20% probability, we will probably still learn something in the process. Catch you on the other side. It is now after 8:30 p.m. We're back. Let's talk about how you could have pulled 16 ES points out of the market today using these levels. There were 4 total trades per the rules. I was able to get into 2 trades, which we'll look at shortly. I knew I had about 2 hours available to trade today since I had to pack up before 11 a.m. for an appointment, and there was too much going on in the afternoon to get back in front of the screen. So while I did get a base hit on the first trade, which is right here on a short position, that was pretty much it for me. This was a wash. We'll take a look at that because I did record as much as I could up until 11 o'clock or so. So after letting them settle in for 15 minutes, price was slightly below this level at 584.07. They were close enough at the close of that 15-minute candle to just sell at the market in the E-minis. In other words, no need to adjust this level with the usual 5-cent buffer. Just go short at the market in the E-minis when the SPY hit 584.07 from the underside. And it did not take them too long to pull away. Here's your reference levels, which is the equivalent of 4 points in the E-mini. You would have gone short about right here, ridden this thing up a little bit. They got above your fumble threshold, but no danger. There was no signal given. Come all the way back down. And there's your 4 points or more in the E-minis. The next trade was a long trade when the spiders got down to 582.93, or as adjusted 582.98. This one was interesting because it was a near miss of the profit objective. So it ended up being a wash. It came down into the level, filled you. You're long at this point in the E-minis, but they come up within 10 cents of your profit objective. And then within a few minutes later, they're down at your entry level. So you want to jump out right here. And that's exactly what I did. And we'll watch that video shortly. And I closed up shop shortly after that. So 2 trades for me. At this point, you have 1 trade in the bag. This is a wash because ideally you would jump out at your entry point so you wouldn't lose anything. So now they're coming down into this zone here, 581.78 to 581.22. I do not adjust the levels on zones. So you would have bought at both levels. You think of it as one big fat level, but you're essentially treating each level independently with the understanding that a zone is probably not going to be as precise. So say you bought 2 contracts here, you're going to buy 2 there and then 2 here. So you're going to be 4 long somewhere in the middle. Happens to be around 581.50. So your average entry price would be 581.50, and then whatever the corresponding price in the E-minis was, looking for 40 cents or 4 points. And while they got below the fumble threshold, same thing as before, no harm. There was no big deal. It was actually a couple safety nets down here that we can look at perhaps. But the point is you're looking for the 4 points, and they gave it to you here, and they continued a little bit higher. Here's kind of what I mean by safety nets. So say it's 10 o'clock, 10:30 or so, and you're watching price come down, and you know where your zone is that you're considering buying at. Your zone is right here. And you know you have a 200 period moving average that price has not hit in a while. This is the black upsloping line here, and it's right below the zone. And so if you just put a reference level on this chart here, just to kind of gauge if they continue the same rate, where will they hit this 200 period moving average? Well, they'd hit it about right here. Let's just put this in light blue or so. Does this level, does this area align with anything else? Is there any kind of corresponding levels on other charts? Well, there happens to be in the half-hour chart, the 30-minute chart, because at the same time, price is coming into the 30-minute chart, the 30-minute chart's 100 period moving average, which is the purple line upsloping. Once again, it's right below the zone, kind of a safety net. And then on the hourly chart, they would have broken below the 50 period. This is the blue line, and the zone is right there in the middle. So somewhere in this area is kind of like a zone below the zone, if you will. So those are just some examples of a safety net, why it would be not a bad idea to go long at that zone. And given the trade time to settle in, and develop, gave your base hit, as we already saw. The last trade would have been up here for a recycle trade. This time, the level, which was originally 582.93, would be 582.88. If you want to adjust it, so now you're on the short side, waiting for them to come down. Where do you want them to come down to? To roughly here. This is 4 points in the E-minis, but you don't want them to go above and close above here. There's your other 40 cents or 4 points on the other side. So you're short here, waiting for it to happen. Once again, you're not in any kind of danger. They come back and give you your base hit, several opportunities to pull your 4 points or maybe a little more. So that's how you could have pulled 16 ES points out of the market today based on the levels from this morning. I mentioned I got in late. So here's 9:45 and they were above this. So they're coming back down and I just sold short. You see where it's at in the E-minis and got a little bit better price. So this is 5 points in the E-minis, whereas 4 points was below this. So I felt pretty comfortable just waiting this one out, especially since they had already gone up and I got a better price. But anyway, so you can watch this one take place. There it is. There's the 5 points. So now I'm putting in an order to buy at 582.95. I just pulled it up a few pennies, and I got in this trade. And maybe I'll pause this hopefully at the right time to show you what I mean by this near miss of the profit objective and how I jumped out at just the right time. This is by the rule strictly, as I like to play these. It's just a way to kind of avoid getting into trouble. All right, here we go. So now I'm long 3. What I want to do is pull 2 off at a base hit of 4 points and trail the other one up higher, assuming they could bounce and go higher from this point. However, so you see this is, I've got the green line. This is 40 cents or the equivalent of 4 points. So there it is. I'm going to pause it right here. So they're here. They've come up within 10 pennies, 10 cents of this level. Now they're coming back down. Now if they come back down to my entry point soon, like the sooner they do this, the worse. I'll put it this way. The sooner they do this, the better chance you're going to have that they're going to go lower. It takes a while for them to come. They might end up going the direction you want them to. This doesn't always work out this way, but as soon as they got down to my entry point, I just bailed out of the trade. So we can just back up one more time to see it, to show it to you. So I didn't really incur any kind of loss. Boom, right there. And this was pretty much it. It was 15 minutes or 10 minutes or so in front of 11. I just stopped this recording, closed up shop, and I wasn't at my computer for the rest of the day, or at least not trading for the rest of the day. Let's go over to the daily chart to see if we can learn anything. We got a doji candle. That's what happens when you have a flat day, hardly down at all. And that's on relatively low volume, under the average, and then the timing is pretty decent. One thing to consider is while they didn't do a whole lot in the SPY, in the IWM on the day, they had a pretty big down day, almost 2%, 1.7% down in the IWM. So is the SPY going to follow suit? Hard to say. I mean, it's not like they're going to correlate 100%, but they're weak, and you have this kind of a signal here. That's about the only thing you have going for it. They've been bouncing off this 20-period moving average for a while. Then maybe over here on the hourly chart, you see what's I would consider a classic kind of bearish type of consolidation. There's a few divergences here. While they did close above the 50-period moving average, which is generally a bullish sign, this type of bearish inside bar consolidation type thing, whatever you want to call it. They come down here, they're stair-stepping up 1, 2, 3, 4, 5, 6 hours, the 7th hour, 8th hour, whatever. If they get closes above the high of this, 1 or 2 or 3 hour closes, then this thing is off the table. But generally, they're going to find some type of overhead resistance and come farther down and maybe get back below the 50 period for a while, or even down here somewhere. We'll see. There could be some more things in the morning with the overnight session that can give us some more information about what tomorrow might bring. First log is the playing by the rules log, PBR. And you can read the notes, essentially base hit, first level 5, and then level 4. The first time was a wash because of the near miss of that profit target. Averaged in with these two levels, base hit on the combined position, back up to level 4, and a recycle on that. So there's your 16 points. And my trades were 5 points on the first base hit, and then this next one here is essentially a wash, lost a tick or so, so 475 before commissions with my 2 contract trade. That's it. It's a wrap for today. Thanks for watching. Hope you found some value in this. If you did, thanks for showing your appreciation. We'll be back tomorrow morning with new levels, another game plan. Possibly going to have a pullback based on what we saw in the hourly chart, but there's other things to consider. But anyway, thanks again and have a great rest of your day. Talk to you tomorrow.